Okay guys, it's 8:17, closing the music. Welcome to my weekly webinar. We are here to discuss markets, to discuss what's happening in the market, what's happened last week after Fed Reserve's statement. Okay, so I have some presentation for you. I will show you in numbers, in pictures, in statistics, what do we have. By the way, I am options trader. I trade not markets, not normally. I trade markets not normally like everybody, buying stocks or something. Yes, I'm buying stocks, but mostly, as you can see here, my channel is trading neutral. So what is trading neutral? Neutral is when you are not guessing where market should go. Okay, so I'm trading like this without guessing. How? It's a little bit complicated. Don't ask me right now. I will have some educational webinars here, some free, some not maybe, and we'll explain you what I am doing. It's sophisticated options trading system, so not everybody can understand from the first time. Okay. I decided some 10 years ago, I will no longer guessing. Okay, I don't like this guessing because market's a little bit random, especially short term. Okay, so I have some portfolio, long-term portfolio, and also have some speculation on market neutral trading system on options. I have just two strategies: pair trading and options trading. Okay, not about these trading systems. I'm not going to explain you these trading systems. Okay, let's go. So how to change my screen? This one. Okay, please write me. Can you see my presentation? Okay, please write me in the chat. I can't see chat. Okay, sorry. Please write me here. Okay, I hope you see. Nobody's still writing. Okay, can you see presentation? Please write me. Yes. There is some lag. Yes, right, there is some lag. Let's start. Okay, it's me. I'm Fred. Okay, I'm Fred. Actually, I'm not. 1 minute. How to change? Yes. This is me. It's old picture from some conference. I'm a trader, asset manager, and some speaker on conferences, on some podcast webinars. I like it really. You can see, you can feel how I like to speak public. Some speaking, explaining something is like not hobby. I'm addicted to do things like this. Okay, so this is the same. Look, I told you before, a little bit picture, not high quality, but anyway, it's me. You can see how amazing is view. But okay, it's not about this conference, not about view. Okay, look, last week Wednesday, the same time, about 8-9 o'clock, we had some Fed Reserve meeting. This meeting was the most important meeting for this even year, not just summer. And everybody expected some signals. Okay, signals about what? Signals about inflation, signals about how Fed Reserve will react on this inflation, how they will increase rates and when, what they will do with quantitative easing. But Fed Reserve said that, listen, we are just talking about future talkings about increasing. Okay, good, actually good. I like this word. They're not talking, they're just talking about talking. Good. So they sent to the markets some signal, some message like, we are here, we're ready, but not now. Not now, because pandemic crashed our economy. We're just recovering, and this trend, this process, not quick. We have to wait until economy will be recovered, fully recovered. How we call it? We call it full employment. Full employment is when in economy you don't have enough how to say, labor force. So everybody already working, everybody has some salary, some job. So GDP, it's impossible to grow for GDP because nobody to create this GDP. We call it full employment. So if it's full employment, not full employment yet, they are just trying to bring full employment how to say, full employment to the economy. Okay, so they will do everything, keep rates lower to bring this full employment. Not now, we are a little bit far from full employment, and I think they are expecting full employment in 2022, not even this year. Okay, so look, this chart is about yields. What is yield? Yield is how much investors required for risk-free, actually 2-year US Treasury yield, not risk-free, but okay, close to risk-free. Risk-free is 3 months, 90 days. So they just required a little bit more because Federal Reserve said what they said, they said, it's Coca-Cola, wait. Because Federal Reserve said we will increase rates in 2023, even not next year, 2023. So why I should keep my bond if I can sell it and buy later with higher yield? Because yield will be higher. Okay, so selling bonds means increasing yield. Okay, it's a little bit complicated, forget about it. We are not trading these bonds. So just make conclusion. Federal Reserve said we are here, we are ready, we will increase rates, not now, not next year, 2023, and 2 times. It was a little bit more how we call it, hawkish. Yeah, hawkish, right? There is some two states of the policy, Federal Reserve policy, hawkish and dovish. Hawkish is a little bit when you are tending to increase rates, right? So not so much, but a little bit hawkish. Second, everything under control. Third, yes, inflation is here and it's a little bit higher than expected. Okay, let's go to Cristiano Ronaldo. Everybody knows Cristiano Ronaldo, right? Time to time I will check my chat, right? Yeah, everybody here. Okay, good. Yeah, look, we call bullish on a markets, we call hawkish on a policy. Yeah, it's looks like the same, but we have 2 different words for bullish markets and hawkish policy, Federal Reserve policy, I mean. So there is special word, there are 2 special words for policy. When Federal Reserve expecting increasing or more, I would say hawkish, we call it hawkish. Okay, let's go. Cristiano Ronaldo on UEFA press conference after some match, some game, he said, it's not said, can you see these 2 Coca-Colas here? He just, who is this? Siri. I said Cristiano Ronaldo or something, Siri is starting to answer. Hey, nobody asked you about Cristiano Ronaldo, I am speaker here. Yeah, so amazing, this Siri talking something. Okay, forget about Siri. He took just these 2 bottles and moved to the right, for him is left side of the table, and took his own water and started to drink. I don't know, or not started. Actually, everybody says, and it's written here, that it's from media. It's I'm not talking about Coca-Cola. I'm not agree with this term. Media say that yes, Cristiano Ronaldo, he's this, he moved these 2 bottles and Coca-Cola crashed for 4 billion capitalization. It's not true. It's just coincidence. This day was Coca-Cola ex-dividend day. What is ex-dividend day? When some company paying dividend, not paying, but fixing that, yes, today everybody who has these shares will be paid in the future. We call it ex-dividend days. We have some 4 dates: ex-dividend, ex-dividend. Yeah, we have some video. Look. He's just taking 2 bottles and moving one by one. Hello, Cristiano. Yeah, this is water. Good. Yeah, he did it just one time, okay? But this video continuously playing. Yeah, good. We will absorb this Cristiano Ronaldo. So this day was ex-dividend day. We have dividend day, payment day, ex-dividend day, and announcement day. Probably in the future I will explain these dates, how to buy shares for dividend, okay? Even if you have shares one day before ex-dividend day, you are already counted like shareholder, and you will pay it by dividends, okay? So it was ex-dividend day, and when any company pays dividends, this day shares going down. Why? Do you know why? Because company takes money from the balance sheet and paying for investors. So company's value of this company should decrease. It's absolutely normal thing for any company. And this day was what? Do you know? Federal Reserve System. So these 2 events, facts, influenced, decreased shares of Coca-Cola, not Cristiano Ronaldo, mostly. Probably, yeah, investors added more sales, more shorts because of this, but not the main thing. From the main reason was not Cristiano Ronaldo. I have some user here in chat. Okay, good. In Zoom, we have some people in Zoom, some in YouTube, but don't ask me why I have just a little, just some few, because we just started this channel. This is my second probably Wednesday webinar, and of course nobody knows about it, so we will get more subscribers in the future, and I believe, I hope, I'm sure that this channel will be less or menos popular, because I'm trying to bring you most important, most interesting things. Okay, forget about media, okay? If they're writing something, even about Bitcoin, about economy, sometimes this is because of clickbait. They are just looking for some news, some scandals, okay? This story was like this. Okay, Cristiano, bye-bye. Next pick. I don't know how to move to the next pick. Okay, this is shares. Look, Coca-Cola started to go down before this Cristiano. Probably this day was Cristiano and Fed meeting, and no, 18. Yes, 18 of June. Somewhere here. Yeah. No, this one. 18, 17. Yes, right. 18, 17, 16. This day. You know, they closed at the minimum. Probably started with Cristiano, then dividend payment day influenced for decreasing, and then Fed Reserve meeting. I have Coca-Cola shares. I didn't buy on this event because I have a lot. Okay, that's why. But it was good chance. Look, support line, some 22, $23, not 20, $52, $53 is a good support line. From these lows, from this, and here also we reached this level. So good level for long position. Okay, let's go. It's Fed meeting consequences. I explained to you. Look how much they're buying every week. You're calling you call it printing, right? Fed Reserve printing money, but mostly it's not printing. Some part of this QE is buying bonds, purchasing bonds. 120 billion monthly. They're buying bonds from the market, and if you're buying something, you're giving what? Cash. No, I mean money, not cash. Let me check again our chat. You don't need the Zoom. If you have YouTube channel, you can write here. No need to go to Zoom. Okay, why? Okay, YouTube is more easy to communicate, to check it. Okay, go back. 120 billion every month. If they will do their QE for 1 year, imagine how much is that. 100 billion 20 and 1 year, it's about trillion, 1.3 trillion annually, 1.4 trillion annually. So it's huge amount. They are adding these papers to their balance sheet, giving to the market, to the society, I mean market money, and taking these papers for their balance sheet, because economy needs money, not paper. That's why it's normal. Don't say printing, okay? I don't like this word. Yes, it's printing, but don't say that it's pure printing, inflation, blah blah blah. This is absolutely meme stock traders behave, absolutely crypto traders opinion, and it's little bit not fake, it's little bit because they don't know economy. They know only meme stock, okay? So let's go. Dow Jones we discussed. Look, Dow Jones that day was just less than 1%. Nothing, you know. Fed Reserve added some volatility, but not so much. Just 1% and less. Look, I like this chart. Look, this period. I don't know this color in English. Can you write me what the color this one? Pink. Yeah, pink. These pink areas. 1 minute. Some people ask me how to connect my 1 minute. 1 minute. Okay. Some people still continuously trying to connect but failed. They don't know why. How? Okay, 1 minute. Okay, good. So look, this pink areas is flagged like high focus on inflation by Fed, of course. Okay, I think. Probably no. Yeah, there is some methodology. Look, inflation focus track. This one, blue one, index is Amundi, some company cross asset research proprietary tool based on big data analysis from the web. So this inflation focus track is taken from the Google Trends. Yeah, for example, if you're searching some inflation or costs or how prices increased or something, this data, i.e. big data, goes to Google engine and there is some index from this. Anyway, look, if there is high focus on inflation, there is really inflation, and then this inflation goes down. Okay, this is real inflation. Blue, dark blue, US CPI is real inflation. When it's flagged like focus and prices really going higher, people searching inflation terms and then they fail to search it and inflation really goes down. Okay, it was crisis, forget about this. Again, this flag, this focus on inflation also started before inflation goes higher. Our index also higher, and then just in half of year again it goes down and this goes down. So blue goes down earlier than real inflation, than dark blue, right? Again here, blue goes lower than real CPI. So anyway, every inflation period finish, and after every inflation period and focus on this, prices starting to go down. I think Fed Reserve this time will be successful again, and as they say, this is transitory inflation. So temporary. Probably it will be like this. And by the way, As you know, this inflation driven not mostly, but yeah, driven by commodities. Look at oil before, look at gold before, look, gold higher, oil, gold, lumber, copper, all these commodities going higher. So that's why if these commodities stop to grow, but they stopped, inflation also will be under control or less than 5%. Look, it's 5%. Look, 5%. I think somewhere here will be 5, 6 maybe, and then we will go down. Fed says like this. Fed says that it will be like this. I will check how many people here. Is it okay? Everybody just connected? Yeah, it's good. Yeah, YouTube, click the bell, please. Click the bell. Thank you. The hacker, click the bell. Subscribe if you like it. It's not bell. Where is bell? Yeah, I don't have because I've subscribed. Okay. If you just subscribed, you will have, every time you will have some alert, and I will put some Premiere, YouTube Premiere. You will have this alert notification before we started, not just after. Okay, let's go. Cristiano Ronaldo, inflation, Treasury. Look, market. I think market more sophisticated than ordinary people, than consumers, than traders. Market, this Treasury bond market, actually they are from hedge funds, they are from investment banks. So look, they stopped to push yield higher in April, in May. Now Treasury yield is lower. So what does it mean? It means that they are no longer expected higher inflation. Because if you expect higher inflation, you will sell bonds and yield will be higher. No, this process stopped somewhere in April, May. I would trust to market, not this meme stock traders market. I would trust to hedge funds. I would trust this professional market, more institutional market than this publics from Instagram continuously talking about inflation. Yeah, there is some inflation, but I think it will be under control. Okay, let's go. What's happened last months? Look. Expectations. Fed said we will increase rates 2 times in 2023. Let's check how many an analyst expecting, members, not analysts, members expecting. This is FOMC. What is FOMC? Federal Open Markets Committee. This is FRS, Fed Reserve, okay? How many members expecting rate increase? And this is median, the average, okay? And this is real. I can't see this one. Yeah, it's because if it's about, yeah, it's here. Look. So 2021, all members expecting no increase, no decrease. Flat. Nobody expect increase. 2022, some 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 says it will be the same. Some says we will decrease, and some says we will decrease 2 times. Okay, 0.75. 2023, look. Diversity, okay, diversity. Some here. Some members says no, will increase 2 times, some 3 times, some 4 times, some 6 times. Oh my God. We have so many FOMC members and everybody talking about different things because 2023. And more than 1 year, more than this term, not 1 year, this term, okay, rates median should be somewhere here. Where? 2.5%. Okay, 2.5%. So good. We call it dot plot. Fed's dot plot. It's actually more informative than any analyst. Okay. Okay, let me check again our chat if there is. Yeah, no IMG. What is IMG? IMC maybe. No? AMC. What is AMG? AMG is a Mercedes, you know. AMC and GME. Okay. So let's go to our chat. This is Powell. Nothing new. Okay, you can read here. I just get okay. Look, because today's topics were discussed partly last Friday, Fed Reserve. So today, my speech a little bit short. You can add me on Tradingview and also on Instagram. Okay, and we will have some course. By the way, some people asked me what about education. We will have some courses, some free, some not free. You can check my website. This is tradingneutral.com. We just started to design this site. Okay, even logo just missed, but I'm planning some big course in July or August. So anyway, I will tell about announcements here. So guys, if you have some questions, you can ask. This video will be somewhere on YouTube. You can check later. For today, just explained, discussed everything I planned. Okay, Federal Reserve, gold. Yeah, trades. I continuously promise you to show my trades. Look, now earnings season not started. Okay, earnings season starting at 1st of July, technically. So because I trade options, strategies on earnings season, so I don't trade now. So from 1st of July, I will start to create my watch list, portfolios. I will start create my strategies, tactics, and every webinar will show you what I'm doing with my strategy, market neutral strategy. So for now, it's like vacation. Okay, there is some break on earnings season, and that's why there is no so many trades. But by the way, I have what? I have my some small portfolio for 1 minute. Where is my Google here? Right. I have some small portfolio here for shares, and I'm buying continuously shares I like. So you can see here Lennar, Intel, Micron, Dell, Apple, Twitter. Okay, so there is some small profit. I will close some, I will open new. It's just very passive, very not active portfolio. I like these shares, mostly Apple, Dell, and where is my TSM, Taiwan Semiconductor. And it's not my strategy, it's just portfolio management for long time. Okay, if you have questions, you can ask. Thank you for attending. Thank you for visiting my channel. 1 minute. Okay, so see you next Wednesday. If you subscribed, you will see everything related to this channel, and you will see some preliminary notifications. Okay, thank you guys. Bye bye. No stream here. Okay, no stream here. It's too dark. I can switch on my lights, but anyway, we're closing. Okay, our webinar. Thank you. Bye bye.